As of right now, on Monday, May 4th, 2026 at 11:23 a.m., Ondas Holdings, Inc., trading under the ticker ONDS, is priced at $10.32 per share, marking an intraday increase of about 2.59% from its previous close. While most investors are looking at that $10 handle and seeing a speculative drone play that has finally found some traction, the reality beneath the surface is far more complex than just a simple momentum trade. The market narrative suggests a small-cap company riding the wave of defense spending and autonomous technology, but the internal mechanics of Ondas suggest a business that is effectively a venture capital portfolio masquerading as a single public stock. If you've been watching the charts, you know the volatility has been relentless. The stock has a 52-week range that spans from under $1 to over $15, and today's movement is just one small ripple in a much larger and far more dangerous tide. Most people see the $375 million revenue guidance for 2026 and think the growth is guaranteed. However, the expectation that this revenue will translate into shareholder value is being challenged by a massive warrant liability and a dilution machine that has issued billions in gross proceeds since last year. Expectation tells us that a 600% year-over-year revenue growth should lead to a vertical stock chart. Reality, however, shows us that much of this growth is inorganic, fueled by a relentless streak of acquisitions, including names like Worldview, Mistral, and Bird Aerospace. When a company buys its way to growth, the integration risk becomes the silent killer of the bull case. We are seeing a massive disconnect between the top-line numbers and the actual cash flow. Despite the $1.5 billion cash balance, the company is still burning through capital at a rate that would make most disciplined investors stay away. This is where tools like Schwab Intelligent Portfolios or generic investing sites often struggle because they can't always account for the sheer technical complexity of a company that is trying to build both a private wireless network for railroads and a global drone-in-a-box service simultaneously. For those of you managing a Robinhood or Interactive Brokers account, the temptation to chase the high volatility swings of ONDS is strong, but you have to look at the institutional activity. We are seeing a shift where the smart money is starting to demand proof of organic execution rather than just more press releases about new contracts. The intraday volume today is sitting around 45 million shares, which is significant but actually a bit lower than the recent 20-day average. This tells me that the big players are holding their breath. In the world of online investing and investment help, the common advice is to follow the trend, but with Ondas, the trend is a jagged saw blade. If you are using a Fidelity trading platform or the SoFi Active Investing Suite, you might notice that the technicals are currently trading above the 200-day moving average, which is a bullish signal on paper. Yet when you dive into the valuation, ONDS is trading at over 10 times forward sales. Compare that to the broader technology sector or even specialized peers like AeroVironment, and you realize you are paying a massive premium for a company that isn't expected to see true profitability until 2028. This is the classic tension between a visionary story and a grounded balance sheet. The story says Ondas is the future of the industrial Internet of Things and autonomous defense. The balance sheet says they are a high-burn enterprise that recently took an $82 million non-cash hit just from revaluing their warrants. Let's get real about the business model because it is often misunderstood. Ondas operates through two main segments, Ondas Networks and Ondas Autonomous Systems. The network side is about mission-critical wireless broadband, targeting massive industries like rail, utilities, and oil and gas. They have this proprietary full-max platform that is supposed to solve the bandwidth issues of legacy systems. On the other hand, the autonomous system side is where the hype lives. This is the drone-in-a-box technology, often sold as a robot-as-a-service model. This sounds great for recurring revenue, which is why individual brokerage users and those looking for online investment opportunities often flock to it. But RaaS requires huge upfront capital expenditure. You are essentially paying for the drone, the box, and the deployment, and then hoping the client stays long enough to pay it back. It's a model that works beautifully at scale, but is incredibly painful during the ramp-up phase. If you're managing your own portfolio through a Fidelity mobile app or a Robinhood app, you need to be asking yourself if you're comfortable with the bridge to profitability actually being a several-year-long trek through deep losses. The institutional side is where things get interesting. We've seen substantial capital raises, nearly $2 billion in total proceeds over the last year. This has provided a massive war chest, but it also means the shares you bought yesterday are worth a little bit less today in terms of your percentage of the company. In the realm of self-investing, this dilution is often the most overlooked risk. Investors see the cash and think safety, but they don't see the shares outstanding ballooning. Comment below how many shares of Ondas you currently hold, or if you are planning to exit before the next earnings call. It's important to see where the retail sentiment sits versus the institutional positioning.
While the consensus recommendation among analysts remains a buy with some price targets as high as $20, firms like Zacks have issued a strong sell rating based on the valuation premium and the earnings downward revisions. This is the exact kind of friction that creates massive trading opportunities for those using sophisticated platforms like Interactive Brokers, but it can be a nightmare for someone just looking for a stable long-term investment. Looking at the sector momentum, we are seeing a lot of these communication equipment and drone names moving in a risk-off tone. Peers like Red Cat Holdings and Rocket Lab are feeling the same gravity. The macroeconomic pressure of high interest rates makes it harder for companies like Ondas to justify their high burn rates. Even if you have a diversified portfolio with Fidelity ETFs or Fidelity mutual funds, the speculative corner of your holdings is likely taking a beating right now. The reality is that Ondas is trying to do something incredibly difficult. They are trying to standardize a technology that the FAA is still figuring out how to regulate. They were the first to get BVLOS approval, which is a massive win, but regulatory success doesn't always equal commercial success. The execution at the OAS level has been impressive, with revenue growing from $5 million to nearly $50 million in a year. But when you raise your guidance to $375 million, you leave yourself absolutely no room for error. If they miss that target by even a few percent, the market will likely punish the stock severely because the current price is built on the expectation of perfection. The future outlook for ONDS depends entirely on whether they can stop the bleeding and move toward that third quarter 2026 goal of product-level profitability. If they can show the market that their acquisitions are actually talking to each other and creating synergies, then that $20 price target might not be so crazy. But if we see more integration delays or if the warrant revaluations continue to swing the bottom line by tens of millions of dollars, the stock could easily retest its yearly lows. Investors who prefer a more hands-off approach might find solace in a SoFi robo-advisor or intelligent portfolio settings that naturally trim these high-risk positions. However, for the active trader, the volatility here is the main attraction. The expectation was that 2026 would be the year of the breakout. The reality is that it's looking more like a year of hard work, restructuring, and trying to prove that the autonomous part of the business refers to their drones and not their spending habits. In summary, Ondas is currently a battleground stock. You have a massive gap between the valuation the market is willing to pay and the actual fundamentals on the ground. The live price of $10.32 reflects a market that is cautiously optimistic, but clearly scarred by the historical volatility of this ticker. We've seen incredible top-line growth, but it's been purchased with heavy dilution and a complex web of acquisitions. The contrast between the visionary drone-in-a-box narrative and the reality of a company that is still years away from true net income is what defines the risk profile here. Whether you're trading on Robinhood or managing a sophisticated Fidelity wealth management account, you have to decide if you believe in the management's ability to execute on a $375 million target that is nearly 8 times larger than what they did last year. It's an ambitious bet, and in this market, ambition is either rewarded with legendary gains or met with a very harsh reality check. The depth of the backlog and the strategic importance of their defense contracts provide a floor, but the ceiling is capped by the sheer amount of work left to be done. Maintain a close eye on the institutional flow and the next quarterly report, as those will be the true catalysts that decide if Ondas is a long-term winner or just another high-flying tech story that eventually returns to Earth. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.